Hi everybody, this is week 5 lecture 2 for ACT3110. In this lecture we will start a new topic, that is the topic 3, and these lecture notes are for two topics, topic 3 and topic 4. So let's see. Okay, this is like the introduction to topic 3. In the previous lecture, you have seen step 1, step 2, step 3 and step 4 in the accounting cycle. Step 4 in the accounting cycle is preparing a trial balance. So in topic 3 and 4, you will learn about step 5, step 5, step 6, step 7 and step 8 in the accounting cycle. So now the next thing is to learn about step 5 in the accounting cycle, which is doing the adjusting entries. This slide is like the introduction for you before you learn how to do adjusting entries. Okay, let's see. So before you can do adjusting entries, you have to understand this. In accounting, there is an assumption or principle that we call time period principle or assumption, or sometimes textbook mention it as periodic reporting assumption or something. Okay, so time period assumption says in accounting you have to divide the life of a business into several periods. So typically the life of a business will be divided to yearly. So every year a business will close its account so that the business can calculate profit. If you do not divide the life of a business into yearly or other periods, then you cannot calculate the profit. So according to the law and regulation, every business has to close its account or has to calculate its profit at least once a year. Okay, that is a must, once a year. So see here, if a business started its operation at 1st of April, and let's say 1st of April this year, then the business has to close its account 31st of March next year. That is 1 year. 1st of April this year to 31st of March next year is 1 month. Like I said earlier, in accounting you have to close your account at least once a year. So, but if a business started its operation at 1st of January, then the business has to close its account at 31st of December. But the fiscal year or the financial year is always 1 year. If you start a business at 1st of February, then you have to close your account next year 31st of January. If you start your business at 1st of May this year, then next year you have to close your account at 30th of April. Okay, always remember, in accounting you have to close your accounts periodically, at least once a year. Sometimes some businesses, they close their account every month because they want to know every month how much profit they can make. So it depends on the business, but according to the law and regulation, at least once a year. Okay, the second thing that you have to know before you can do adjusting entry is accrual accounting. In accounting, we have two bases of recording, accrual basis and and cash basis. Okay, let's see here. What is accrual accounting or accrual basis accounting? What do we do when transactions span more than one period? So accrual accounting, revenues. Okay, remember this. What is an accrual accounting? If you use accrual accounting to do or to make accounting record for a business, then you have to remember this. For accrual accounting, revenues and expenses are recorded as they are earned and incurred, not necessarily when cash is received or paid. This method better measures a firm performance than do cash flow data. So remember, if you use accrual basis accounting, you have to record revenue when the transaction happen, not when the business receive cash. And you have to record expenses when the transaction happen, not when the business pay cash. There are examples about how to use accrual basis accounting and cash basis accounting. Okay, this is related to revenue recognition principle. If you can remember, in topic 1, you have learned about revenue recognition principle. The principle says, in short, the principle says, in accounting, you record revenue when the transaction happen, not when you receive cash from customer. Or in other words, in accounting, you record revenue when goods are changing hand. So in accounting, if somebody asks you when is the sales transaction happen, the answer is the sales transaction happen when goods are changing hand, from the hand of the seller to the hand of the buyer. The sales transaction or the revenue transaction has to be recorded when the goods are changing hand, not when the business receive cash from customer. That is the short way to explain about that. Okay, revenue recognition. You always remember, in accounting, we record revenue when the transaction happen, not when the business receive cash. And we record expenses when the transaction happen, not when the business pay cash. Let's say you have a business. And then today a customer come. And then you provide service to this customer. After you provided the service, you charge the customer $100. And the customer said, the customer said she will pay $100 at the end of the month after she get her salary. So the question is, you have to record the $100. The business has to record the $100 as revenue. The business has to record the revenue today or at the end of the month when the business get $100 cash. Okay, the answer is today, because the transaction happened today. The service has been provided today. So in accounting, you record the revenue when the transaction happened, not when the business receive cash. Okay. Another example is for expenses. For example, let's say you have a business, and then you have one worker. So you pay the worker $1,200 per month. So let's say today is 30th of April. So the worker has worked 1 month for the month of April. Today is 30th of April. But you pay the worker salary. You will pay the worker salary on 5th of May. you pay the workers $1,200. So when is the time to record the salary expense? Today at 30th of April, or the time when you pay the salary at 5th of May? So when is the time to record the salary expense? The answer is you have to record the salary expense today, at 30th of April, not when you pay cash to the workers on the 5th of May. Why? The reason is, always remember, in accounting you record the expense when it happened. The workers has worked in April, so you record the salary expense in the month of April, at the end of April, 30th of April, not when you pay cash at 5th of May. The way to record that, I will explain later, but you have to remember the rule. You record the revenue and expenses when the transaction happen. Okay, another principle related to adjusting entries is the matching principle. Okay, the matching principle is like this. The matching principle says, in accounting, if you want to calculate profit for the month if you want to calculate profit for one accounting period, you have to match revenue in that period and expenses in that period only. For example, you want to calculate profit for the year 2021. So, according to the matching principle, to calculate profit for the year 2021, you have to match revenue for the year 2021 and expenses for the year 2021 only. So the calculation is revenue for the year 2021 minus expenses for the year 2021, then you will get profit for the year 2021. You cannot add revenue from year 2020 or revenue from 2022. No, you cannot do that. And also you cannot add expenses from the year 2020 or expenses from the year 2022 in the calculation. No, you cannot do that. Always remember, matching principle says if you want to calculate profit for one accounting period, then you have to match revenue for that period with expenses for that period only. Okay, so see here, this is an example of accrual and cash basis accounting. Remember cash basis accounting? I have explained that in the previous slide. If you use, or if a business uses accrual basis accounting, then the business has to record revenue when the transaction happen, not when the business receive cash from customer. And also the business has to record expenses when the transaction happen, not when the business pay cash to somebody. Okay, but if a business use cash basis accounting, the business will record revenue when the business receive cash from selling of goods or from providing of services, and the business will record expenses when the business pay something to somebody. Okay, let's see this example. You have to know this. This is, I think, important. Okay, in year 2019, Bond Consulting billed its client for 48,000. On December 31st, 2019, it has received 41,000 with the remaining 7,000 to be received in year 2020. Total expenses during 2019 were 31,000 with 3,000 of these costs not yet paid at 31st of December. Okay, so then there is a question. You have to calculate profit using cash basis accounting and accrual basis accounting. So let's see cash basis accounting first. Remember cash basis accounting? Cash basis accounting, if you use cash basis accounting, you record the revenue when the business receive cash and record expenses when the business pay something. Okay, cash basis accounting, to calculate the profit, the basic formula is revenue minus expenses. So how much is the revenue for this business if the business uses cash basis accounting? So see, bond consulting bill its client 48,000. December 31st it had received 41,000. So cash received is 41,000. So that is the revenue. So you can see here, cash basis accounting, the revenue is 41,000. The revenue is the cash receipts. And then how much is the expenses? Okay, see here, total expenses in year 2019 were 31,000. 3,000 not yet paid. So if the total expense is 31,000 but 3,000 is not yet paid, so how much is the expense according to cash basis accounting? So the expenses is 31,000 minus 3,000. So see here, to calculate cash basis accounting, the cash disbursement or the expenses equal to 28,000. So according to cash basis accounting, the profit made by this business is 13,000. Okay, now what will happen if the business uses accrual basis accounting? So you can see there, if accrual basis accounting, remember, if a business uses accrual basis accounting, the business has to record revenue when the transaction happen and also record expenses when the transaction happen. So revenue for year 2019, you read the scenario again. The bond consulting billed its client for 48,000 and received only 41,000 cash. So during the year, the business has provided services to clients and the value of the services is 48,000. So that are the things that happened in the year. So using accrual basis accounting, you have to record revenue as 48,000. That are the things that happened during the year. Services has been provided during the year with the value of 48,000. Okay, and then expenses. Like I said earlier, using accrual basis accounting, expenses have to be recorded when they happen. So during the year 2019, total expenses were 31,000. That are the things that had happened. So under accrual basis accounting, the expenses are 31,000. So what is the income? The income is $48,000 minus $31,000 equal to $17,000. Okay. So you can see the difference. Under cash basis accounting, the profit is 13,000. Accrual basis accounting, the profit is 17,000. So you have to know how to calculate profit using cash basis accounting and accrual basis accounting. The second thing is you have to know about this. If somebody asks you which one is more accurate to calculate profit, cash basis accounting or accrual basis accounting? Okay, the answer is accrual basis accounting is more accurate for calculating profit, because when you use accrual basis accounting, it shows what had happened during the accounting period. For example, in this scenario, it shows that during the year 2019, revenues are 48,000, expenses are 31,000. So profit during the year 2019 is $17,000. So it is more accurate compared to cash basis accounting. Actually, cash basis accounting does not show things that had happened in an accounting period. But cash basis accounting shows cash in and cash out only. So you can see here, it shows that during the year 2019, cash received or cash in is 41,000. Cash out or cash payment is 28,000. So the net income is actually the net cash. Cash in minus cash out. That is what cash basis accounting shows. Accrual basis accounting shows what had happened during the year. So the profit can be said as more accurate compared to cash basis accounting. With that reason, the accounting standard used in Malaysia only allows business to use accrual basis accounting when the business prepare financial statement. So I think it's same with other countries. So remember this, in Malaysia the accounting standard only allows businesses to use accrual basis accounting to calculate profit when they prepare the financial statement for businesses. If you have a business and then you have let's say you have to follow the accounting standard, then remember you have to use accrual basis accounting in the recording process. You cannot use cash basis accounting except for your own purpose only. Let's say you have a business, you want to calculate profit using cash basis accounting, you can. That is for your own purpose only. But for to prepare financial statement, the statement later you want to submit the financial statement to the tax authority and other regulatory bodies, you have to use accrual basis accounting. According to the law and regulation, you have to use accrual basis accounting. Okay, I stop here. Do not forget to write your name and matric number in the comment section. I will take that as the lecture attendance for today. Thank you very much.